Hey everyone, welcome back to the channel. Today, we're taking a deep dive into one of the most powerful and influential tech companies in the world, Microsoft. Whether you're a seasoned investor or just starting out, one question remains. Is Microsoft stock a smart buy right now, or is it overvalued? In this video, we'll break down the company's business model, financial health, future potential, risks, and whether it deserves a spot in your portfolio. Stay tuned, because this analysis might just change the way you see Microsoft as an investment. Microsoft was founded in 1975 by Bill Gates and Paul Allen, and since then, it has grown into a $3 trillion tech empire. But Microsoft isn't just about Windows and Office anymore. It's a tech powerhouse with multiple revenue streams. Windows still powers over 70% of desktops worldwide, making it a global standard. The Microsoft Office suite, including Word, Excel, and Teams, is essential for businesses and students, making it an absolute cash cow. Then there's Xbox, a major player in gaming, which has been growing its subscriber base through Game Pass. But the real game changer is Azure, Microsoft's cloud computing platform, which is the second largest after Amazon Web Services (AWS) and growing rapidly. This means that whether people are working, gaming, or using the cloud, Microsoft is making money. That kind of diversification makes this company resilient, even in tough economic times. But let's talk numbers, because at the end of the day, investing is all about financials. Microsoft has one of the strongest balance sheets in the industry. Over the past 5 years, revenue has grown at an average of 15% per year, and profit margins are around 30%, which is massive for a company of its size. For context, companies like Apple and Google have lower net income margins, meaning Microsoft is highly efficient at turning revenue into profit. Even better, Microsoft holds over $100 billion in cash reserves, which gives it the flexibility to invest in new innovations, acquire other companies, or weather economic downturns. And here's something dividend investors will love. Microsoft pays a steady and growing dividend, which is rare for a tech company. This means investors get passive income while also benefiting from long-term stock growth. One of the biggest reasons investors are excited about Microsoft is its investment in AI. Microsoft has gone all-in on artificial intelligence, partnering with OpenAI, the company behind ChatGPT. They've already integrated AI into products like Windows, Office, and even Bing, which could drive massive revenue growth in the coming years. Microsoft is positioning itself as a leader in AI-powered search, cloud computing, and enterprise solutions. This could be a game-changer, allowing Microsoft to compete with Google in the search engine market and dominate AI-powered business applications. If AI continues to grow at its current rate, Microsoft could see huge revenue increases in the next decade. Now, let's talk about Microsoft's role in the gaming industry, which is bigger than ever. With the $68 billion acquisition of Activision Blizzard, Microsoft now owns huge gaming franchises like Call of Duty, World of Warcraft, and Candy Crush. This acquisition cements Microsoft's place as one of the most powerful gaming companies in the world, alongside Sony and Nintendo. But it's not just about console gaming. Microsoft is pushing hard into cloud gaming, which could be the future of the industry. Xbox Game Pass already has millions of subscribers, and if cloud gaming takes off, Microsoft could become the Netflix of gaming, offering a subscription-based model that generates steady, recurring revenue. But before you hit that buy button, let's talk about the risks, because no stock is perfect. First, regulation and antitrust concerns are growing. Governments worldwide are increasing scrutiny on big tech companies, and Microsoft could face lawsuits or regulations that slow down its growth. If they're forced to break up parts of their business or limit acquisitions, that could hurt future expansion. Second, competition is fierce. Microsoft might be a leader, but it's always facing pressure from Amazon, Google, and Apple. These companies are constantly innovating, and any misstep by Microsoft could result in lost market share. Third, valuation is high. Microsoft is not a cheap stock. Its price-to-earnings (PE) ratio is well above the market average, meaning investors are paying a premium for future growth. If the stock market crashes or we enter a recession, Microsoft's stock could take a hit, even if the company itself remains strong. And lastly, economic slowdowns could impact Microsoft's revenue. If businesses cut IT spending, cloud adoption might slow down, impacting Azure and software sales. One thing to consider is how Microsoft performed during past economic downturns. During the 2008 financial crisis, Microsoft's stock dropped, but it recovered quickly and continued to grow. Even during the COVID-19 market crash of 2020, Microsoft bounced back faster than most companies because demand for cloud computing, remote work software, and digital services skyrocketed. This proves that Microsoft is a resilient company that can weather economic challenges. Now, let's talk about the historical performance of Microsoft stock. If you had invested just $1,000 in Microsoft stock 20 years ago, you'd have over $40,000 today. That's a 4,000% return. Even in the past decade alone, Microsoft has outperformed the S&P 500, proving that it's been a reliable long-term investment. But does that mean it will continue to outperform in the next 10 years? That depends on whether Microsoft can maintain its growth in cloud computing, AI, and gaming while navigating increasing regulations and competition. So, is Microsoft stock a buy right now? Well, it depends on what kind of investor you are. If you're looking for a strong, stable, and innovative company with steady growth, Microsoft is a fantastic long-term investment. It dominates multiple industries, has strong financials, and is heavily investing in the future of AI and cloud computing. However, if you're searching for a cheap stock with massive short-term upside, Microsoft might not be the best choice at this price point. It's trading at a premium, meaning it's not a bargain stock, and it could see some pullbacks in the short term. A smart strategy might be $2 cost average into Microsoft, buying shares gradually over time instead of trying to time the market. At the end of the day, the key to successful investing is doing your own research, thinking long-term, and making informed decisions. What do you think? Is Microsoft stock worth buying at its current price, or do you think it's overvalued? Let me know in the comments. And if you enjoyed this breakdown, don't forget to like, subscribe, and hit that notification bell for more investing insights. Thanks for watching, and I'll see you in the next one.